Can I get a rate cut?
You know something? No soup for you!
Well, not today. Looks like Fed Chair Powell and company, we're all hawkish. We're going to hold rates steady. What is that going to do to the market? We're going to talk about that right now. Before we get into that, please like, subscribe, hit the notification bell, follow me on X. All that stuff helps us get more content out to you. Okay, so we're going to focus here on an article on zero hedge. Hawkish Fed hammers dovish market. Don't see cuts until more confident about inflation. And as of now, the press conference just ended. I was following it a little bit, and basically the message is, and I will quote from what I was watching here, they are encouraged by progress, not declaring victory, has a ways to go. And what all that means is that the Federal Reserve has two mandates, and one of them is to fight inflation. And so what they've been doing is hiking interest rates, and they've done that for the past year or two. We're going to look at a chart regarding those, or I should say illustrating those interest rate hikes pretty shortly. And the way to fight inflation is, one of the ways anyway, is to hike rates. Okay, so the little bit of history here is that the pandemic was blamed and was also the cause for putting a lot of money and printing a lot of money and putting it into the market, as well as supply chain issues, right? So a lot of these supply chains got broken down, items got more expensive. Between that and the money printing, a lot of things got more expensive. Inflation hit. So the Fed went ahead and raised the interest rates to try to curb that inflation, because when you raise rates, money gets more expensive, and when money gets more expensive, less investment happens. And when less investment happens, businesses start to contract. The stock market starts to contract, and that is a way to curb inflation. It's, I'd say it's a blunt instrument, but it might be the best instrument that we have. So for now, what they've done is they hiked rates, and then they stopped hiking rates a few months ago, and now the talk is whether or not we're going to see cuts anytime soon. And the cutting of rates does have particular actions on the market. The article that we're going to focus on, like I said earlier, is right here from Zero Hedge. It says, since the Fed's uber dovish last meeting on December 13th, the dollar is down, bonds and gold are up, and Bitcoin and big tech are surging. In other words, the QE trade or buy all the things, right? Finally, right in the middle of the Fed's meeting, NYBC blows up, sending rate cut expectations soaring as traders reach for safe havens like gold and bonds, putting the Fed in an awkward position of likely having to push back against the bullying market after all the jawboning in the last month was wasted. So, long story short, the market is starting to need to be in the position to be cut. We actually had futures slide overnight, and I covered that in this morning's live show over on Algo Factory. And long story short, I don't know if futures got the message. I don't know if they were just putting more bullets in the chamber. But the way this usually works, at least during the Fed meetings, and the way the Fed meetings affect the markets in the immediate sense, is that if there is discussion of a rate cut, or if there is a rate cut, the markets tend to go up, because the wisdom is that the dollar gets cheaper, easier to get money for investment, and things that are traded against the dollar go up. So that is almost everything. Stocks, just anything, cryptocurrency, other currencies, things like that. And then if the Fed talks about hiking rates or actually hikes them, then the dollar gets more expensive and the markets tend to fall. Well, one easy thing to look at that we're going to look at shortly is the dollar index and how today's meeting affected it. Today was basically no hike, no cut, unchanged rates with hawkish talk. We might have to hike rates again, but more than likely we have to at least hold off until we're going to cut rates. We don't see that inflation has been stopped enough. And everything for several months has been data dependent. What that means is that they're looking for more data to come in before they make any decision. So the basics are right here on the screen. Fed holds benchmark rate in 5.25% to 5.5% target range. Fed to consider any adjustments to interest rates. Fed says risks to goals are moving into a better balance. That is actually a little hair bit dovish. It says Fed doesn't see cuts until more confident inflation is nearing 2%. A little background on that. They look at a 12-month look, right? So you can look back 12 months as far as that 2% is concerned. That's part of the calculation. I'm going to move over to the actual red line. Recent indicators suggest economic activity has been expanding at a solid pace. Job gains have moderated since early last year, but remain strong, and the unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Think about the long run. The committee judges that the risks to achieving its employment employment and inflation goals are moving into better balance. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. That is where the data dependent part comes in. So let me go back to reading it here. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. And of course, they go on further. We're not going to read the whole thing, but basically it's data dependent. They're going to watch as things happen. Let's take a look at the charts and see how this data, this announcement, actually affected the charts, right? We're looking at the DXY. This is the dollar chart, and we're looking at the 5-minute interval, which means each one of these candles is 5 minutes worth of price action. So the initial red line there was obviously a little bit hawkish, which is why we saw the Dixie jump up, right? Hawkish, no rates cutting, dollar strong compared to other currencies. Just a reminder, the DXY is what we're looking at, and this is the dollar index. It is comparing the dollar to other major currencies such as the pound, Japanese yen, the euro, so on and so forth. So then there was a little bit more talk where he may have tempered his message a little bit here as the DXY came back down, and then we saw more hawkish talk right at the end there, which is, I was actually watching and gathering that right from Powell when I said encouraged by progress, not declaring victory, ways to go. That all was just this last bit of the speech and probably contributed to this move up in the Dixie, right? So if you take a look at how this might affect, say, indexes, right? Maybe the SP 500 is a good place to look. And you can see, again, we had a dollar up, a little bit down, and then up again, right? So how does that affect the indexes? Well, you can see where with Dixie, where dollar went up, you can see it's the opposite. So dollar went up in the Dixie, dollar went down in the Dixie index. I'm sorry, let's re-say that properly. Dollar went up in the Dixie, SP 500 went down, right? Dollar went down in the Dixie, SP 500 went up, dollar went up in the Dixie, SP 500 went down, and now is continuing down. That I believe the presser is over now. So we're going to see a little bit of a move down in the SP 500. And you're going to see that across the board. Top right hand side here, you see all the tickers, everything's red. That's against the dollar, and the currencies against the dollar is red. The JPY is a little bit different. The Japanese yen is going to act differently because of the relationship to the Japanese yen in the overall market, okay? But where USD is in the front, like USD CAD and probably here USD CHF, you'll see they are in the green. So, and gold's down just a hair, but gold's really strong right now. We'll talk about that another day. Gold's something I'm really paying a lot of attention to, but I am going to go ahead and back out and look at a higher time on the SP 500. So we might be able to see what may be happening to it. I did talk about this earlier this morning. If you go to the live session that I did this morning, we covered this already, but it does look as if a lot of the indexes are going to follow what I'm about to draw because a lot of them look similar. There was a consolidation between, say, most of December and almost all of January where price, or at least half of January, right? So I don't know, 8 weeks, 7 weeks, where price, at least on this index, was between 47.30 and 48.30. So there was like $100 range, and then it popped up above that range now, and of course it made all-time highs, and that was actually some pretty big news right there. That was like last week that a lot of the indexes hit all-time highs. So now it appears that the current hawkish news is going to temper things a little bit, and I do think it's before it does anything, it will come back into this range right here. Because when you hit all-time highs, there tends to be a sell-off. So I do think, at least for a little while, it might not be as long as I drew on here, but most of your indexes are going to see price calm down. This was the prior all-time high, I believe, at this line in the bottom here, 46.30, and I think price may eventually come back to that, or at least range about in here until there's a little bit more data coming out, from the next Fed, or maybe from the inflation data, things like so. I'll just take a brief look before we go at Bitcoin just to see what it's done. Say the 5-minute chart. It does appear that the meeting did have some effect on Bitcoin. Sometimes it doesn't. Bitcoin's a lot of times these days doing something, but it does appear that right at noon, dollar strong, Bitcoin down, dollar got a little bit weaker, Bitcoin up, dollar strong, Bitcoin went down. So Bitcoin right now is having a lack of volatility in its current spot after the ETFs. The Bitcoin volatility and its own kind of power is diminishing right now and is moving up behest of the dollar. So that's just some good evidence right there that right now Bitcoin's probably going to range for a little while based on that. So we hope this helps. If you have any questions, go ahead and come to, well, first of all, you can ask questions right in YouTube. You can go to the comments section and ask questions. I'm happy to chart things for you. You can come to our live sessions every day, 8 a.m. to 8:30 a.m. to 9 a.m. EST. You can come ask questions. I'll chart for you over there. And, you can also ask questions, like I said, in the comment section. I'll do a chart for you. And come to algofactory.tech. Come over, treat your job, upgrade your life. We'll see you over there. And we'll see you on the next one. All right, hope you enjoyed the show. Please like, subscribe, hit that notification bell. On the screen there you can see our website, algofactory.tech. Tap that QR code to take you straight there. I'm also very active on X. That's algo_factory777. We got TikTok and Rumble. In the meantime, we hope to see you over at the website. Come on over, trade your job, upgrade your life. We'll see you there.